Good morning to you. We've seen the market sort of move here this morning with some green on the screen, and I'm curious how you're thinking about positioning things ahead of the week.
Good morning, Andrew. Great to be here this morning. Yeah, I think, Friday was certainly a welcome move for the markets, and it looks like it's going to continue today. So I take that as perhaps investors think that the CPI number is going to be better than expected. And essentially it's going to lead to favorable moves in the equity market. But I think, it's kind of hard to call that, whether or not that will happen. But what I do think is that inflation is headed in the right direction. We're expecting this big Fed hike, 75 bips to come. I think that's priced into the market. So I think that we're at a point now where we sort of expect these things to happen, and perhaps the market gains some footing. It was also good to see that the S&P actually is trading above the 50-day moving average, 100-day moving average, just slightly so, and they're about the same right now too, coincidentally. So I think that that gives us some hope that perhaps June was the low of the markets. We've seen broad participation on Friday. Looks like broad participation today. Perhaps we're kind of stabling out here.
What's your expectation, not of this rate hike, but potentially the next opportunity for the Fed?
Yeah, so I think after this, we'll be 2/3 of the way done in terms of inflation readings. So we'll have probably, one more before the Fed can say, okay, we've got 3 reads now. Inflation is heading downward. Some of the other numbers are softening, whether it's job, wage increases, things like that. I think if the data continues to be supportive, then maybe the Fed does another 25 bips or so and pauses. Don't forget, they're doing a lot of balance sheet unwind behind the scenes too. And it seems like so far what they're doing is actually working. Right. They're not crushing the economy.
What's the chance that the markets, the equity markets, are just professional optimists, and that they've been professional optimists around this the entire time? That, a month ago, there was a view that the Fed was going to, or I should say a month ago. In July, there was a view, the Fed, they're going to see that inflation's coming down. They're not going to do anything about it. Then they got this hard reality from Jay Powell that actually, yes, we're going to continue. And what's to say that he's not going to continue, and why shouldn't he?
Yeah, I mean, if you listen to everything he's saying, the biggest risk to the market is that he could very well continue, right? He may say, I told you I'm going to make this
Sylvia,
hard.
isn't that the better bet at this point in the ball game? I mean, to actually think that we're going to have interest rates, that we're going to have inflation under control in 2 months. I mean, I don't see it, and I don't know too many economists who see that either, actually.
Yeah, I don't think that we're going to have it under control in 2 months, but I do think that the data is going to soften enough. And I don't think that just, kind of slamming their foot on the gas pedal and doing more and more hikes into the year to kind of crash the economy is the goal either. I do think that there's going to be a middle ground here. So I would expect another rate hike. But what I'm saying is I do think that they're also going to take a pause, because some of the data is softening enough where, there is this reality that perhaps what they're doing is working, right? So I think it remains to be seen. We have to see what happens with jobs. We also have to see just what happens with, sort of earnings and wages and, the price of gas and what happens in the winter with the EU. And if we get a recession there, there are these outside factors that could impact our growth and put us into a recession more quickly beyond the Fed's hike. So although the markets absorb the Fed hikes well and absorb inflation well, that's not necessarily going to continue. And I think he has to be mindful of that.